Good morning, and I know we've had to wait for our FTSE target, but as I've always said, patience is a virtue, and we covered our short position in FTSE down to 73.66. That was in my mind. I had that as a target. So we have achieved the double top formation measure target. We've also gone down, had a little sniff at the 200-day moving average. Now it was down there so quickly, obviously that's why we put the order in, so that if we did it, it would get activated. Our low actually went down to 73.57. Some poor little sausage sold at 73.57 and the market's bounced. We closed up at 74.33. Currently we're trading at 74.19. Now today's the day we've all been waiting for since 2016. B-Day, Brexit Day, Boris Day. Not Doris Day, Boris Day. Now we have seen this bounce. The market has reacted exactly as I said it would on Monday. Now what? Now where do we go from here? I think once Brexit's out of the way, I don't see any reason why the FTSE shouldn't correct or continue within its uptrend. If you look at the way it bounded off that 200-day moving average, and what you have to understand, guys, is that I don't trade with 200-day moving averages. What I use them for is either support or resistance. So, it wasn't just me that had that area in my mind. Others who I've trained along the years would have had the same level and the same idea of covering your shorts and going long down at those lower levels. Now, if I quickly go across to cable, which you need to be watching if you're trading FTSE, you can see we're nudging 131. So the gloom and doom artists that were calling cable down below parity, I would suggest are choking on their cornflakes this morning. Sterling is strong across the board against all of the other currencies. We're strong against the euro. We're strong against the Swiss. We're strong against the Canadian, Aussie, Kiwi, yen. We're good against all these other currencies. So you need to look at the intermarket correlations. You can't just look at euro, sterling against euro and sterling against the dollar. To get a better view of what the currency is doing, you need to push yourself and look at what's happening across the board. FTSE today, as I say, trading at 74.17. We're just above this 50% fib at 74.10. You can see where it held it there and there. Yesterday, thank you, Lord, we actually went down to target area. If we can stay above 74.10 when the cash opens in just under an hour, you've got a chance of correcting back higher. We've got 74.53, 74.59. If you look at yesterday's high, we was at 74.76. This day here, I think, was the key. We made a run for that 75.03 area. We went to 74, 75.14. and we closed down. Alarm. That really set the tone for yesterday. But we've had quite a good bounce. You can see the way it dipped down there, hit it, and then bounded higher. So what I suggest is above 74.10, there is chance for another retracement. Watch this line here. That line here today, when we open, is coming in at 74.61. So unless we take out yesterday's high, I would still advocate that the market should range in this vicinity here. If you look at the stochastics, they have turned bullish, which they would do after yesterday's action. The RSI still points lower, but at extremely neutral levels. We have actually got a buy signal in FTSE today. So I would suggest, as I always do, if the market does dip lower, we are buyers on weakness. The only trouble I feel that we would have buying down at 73.65 is if we went down below 73.43. I think then we would look at these two trend lines. You've got one here coming in at 73.24, the larger one at 73.05. This has to hold. I don't think FTSE can crash, given that the indicators are so oversold. But never say never. Please keep it tight today. Please try and stick to levels and ignore the hype, the noise, the knee-jerk reaction of what we're going to see in Brexit. Good luck. I'm with you all day on the desk.